Now, what is standard costing, and what the standard costing is, and what is the need and importance of the standard costing in the business world, how it is practiced, everything we are going to study in this topic. First of all, standard costing means nothing but the analysis of variances. Variance means difference. It means what? See, in life also, there are two factors. One is what we expect, and the other one is reality. And every now and then we experience it, that what we expect and what really happens, majority of the time, there's a difference in that. Similarly, in cost accounting, whenever certain cost is estimated, the cost which management thinks that they are going to incur, they are going to pay for, that they should pay for, and when in reality the cost is incurred, many a times there is a difference between the two, the actual cost and the cost which management thought of incurring. So when there's a difference between the estimated cost and the actual cost, then one has to reconcile both. What has happened, what has gone wrong, or what has really gone right, so that there is a difference on the positive side or on the negative side. So standard costing is very important tool in the hands of the management of any business, where the estimated cost, which we call budgeted cost, which we call standard cost, is compared with the actual cost of the goods and services produced, and the difference between the two is analyzed. What we mean by analyzing the difference? Difference between the two means either we have saved the cost or we have incurred more cost. So from that point of view, this standard costing is a very important tool in the hands of the management. It helps the management in controlling the cost and then reducing the cost. Friends, we have to understand one thing, that in a business world, everybody starts a business to make profit. But you know, at times, since things cannot be controlled, and there are so many other factors in the business world which are affecting the business, it is just not possible for the business to have profit and business incur losses, like what has been happening for last 3 4 months. So to increase the selling price and thereby increase the profit, though it appears to be very simple, it is not practical, and that cannot be done because we live in a world where there is a competitive market, there are so many competitors in the business. So by increasing the selling price, we just cannot increase the profit. So what is the better option? The better option is to control the cost, and if we can reduce our cost by keeping the selling price same, thereby also one can increase his profit margin. So standard costing helps the management from that point of view to control the cost and reduce the cost to the extent possible, and to maximize the profit of the business. With this standard costing tool, management also can take a decision to either increase the business, that is the sales volume, or decrease the business, because it might happen many times that particular line of business, there are so many competitors and then the things are not going right, then it's better to cut down on that business, to decrease the business. And on the other hand, if that really is giving a good margin and good revenue to the business, then that business also could be increased. So whether to increase the sales and volume or decrease the sales and volume and thereby revenue and profit, this standard costing is again a very good tool in the hands of the management. Now, when a particular goods are manufactured, then there are so many things which goes into that. Now, when a particular material is used, and suppose that material is not of a good quality, and because of that wastage is taking place, and thereby the business is incurring more cost. So in that case, through this standard costing tool, business can understand that which material is that where the business is incurring more amount than the estimated amount, and that material could be replaced with a good quality material which is available at a reasonable price. At the same time, if a good quality material is being used by the business and that is giving a good margin to the business, then the volume of that business material that which is going in the production could be increased. So there also the standard costing helps the management to take a decision either to replace the existing material which is not of a good quality, and then a better quality material could be used which is available at a reasonable price. Similarly, this standard costing tool also helps the management to manpower management. Which workers are really delivering the expected return or results? Which workers are really not delivering the expected result? Which workers are actually my business is paying more as compared to what should have been paid to them? And from this angle, business can take a decision whether to have a particular worker who is skilled or unskilled, what should be the number of such workers, whether business has to cut down on the unskilled workers and employ more skilled workers, or if the business is such that where skilled workers are not as such required, then business can cut down on skilled workers and more unskilled workers could be used. Whatever may be the case, the standard costing helps the management to take a decision in terms of employment of these workers, skilled, unskilled, replacing them also.